Question for me?
Yes, go ahead.
Yeah, is that question for me?
Yes, it is.
Yeah. So see, in fact, we had given a subscribe rating to the issue, as you know, and we were quite positive. But as you know, probably this could have been one of the worst time that the company got listed when amid this all volatility. But I was certainly not expecting this kind of listing, given the participation level that we saw. But let me tell you one thing, that when we look at the companies from its core business model point of view, I don't see that risk really playing out the way the stock has reacted. First of all, when the issue was offered, it was certainly on a trailing basis. It looked very expensive at, let's say, 45 times on trailing basis. But on forward basis, we had calculated that probably on P basis, this should work out somewhere close to 20 to 25 times. And already you are getting the stock much discount to even the issue price. So certainly the valuations has further come down. But the caveat here is that the growth also, whatever we had been assuming earlier, will moderate a bit, because as we know that the credit scenario in obviously in the economy will change, and the spending behavior of a lot of customer will change post this meltdown. But one thing I'm sure is that a lot of transactions of credit card also happens for, say, travel, tourism and online transactions, which will take a temporary pause, and it is not going to stop altogether. Maybe it's a 1 quarter or maybe 2 quarters we might see a slowdown. But I think that this is an industry where SBI Card can still grow at 30-35%, which is very much doable. So our sense is that probably, if no doubt, because of the leverage position, a lot of investors will try to exit at this point. But I think at the current level, it makes sense that somebody who has a horizon of 1 year and can hold it for let's say 1 year's time, then probably one can see a good price level. So I don't see that one should exit at penny. Rather, one can add on at the current level. The only problem here is that a lot of marquee names in the market, the likes of SDFC Bank, ICICI Banks, and all the large banks also have been trading at a much discount to their previous highs. So naturally one will make a comparison, and that's why probably one will try to make a balance. But I would say that one should go and buy to some extent, not just at one time, but probably it can be a part of the portfolio for a lot of investors.
I just have a very simple question, but just to understand, why do you think they're persistent in going ahead with this listing even at a time like this when market sentiment is clearly so poor? Understandably, the fundamentals in the longer term are intact, but as you also just described, the impact on leveraged investors, the impact on the listing price, has been, of course, quite substantial.
Yeah, see, as I told, there are a couple of points which, I said that despite all these difficult times, the stock makes a good investment kind of a candidate, because this would be the only listed credit card company in India, and other other banks normally have one separate division for credit card, but you don't have a separate credit card company listed in India. So normally there are challenges within a bank to grow one particular segment, but this is one company which is focused on one particular segment. So as I said, on a temporary basis there will be a slowdown, but if you look at the trend for last 4 to 5 years, the spending per per card user has been on an uptrend. So in the next 2 quarters, I clearly believe that there will be a moderation, as I said. But the question that we need to ask is it going to stop altogether? No. And the reason being that, as I said, the online transactions and everything is going to take a pause for some period of time, and that will definitely change the growth expectations, what the management also was indicating earlier. But when you look at the overall the spending behavior of Indian consumers, and particularly in credit card area, I believe that this makes a company which has multiple years of growth. But the issue, as I said, is that right now investors will be evaluating a lot of other investment opportunities and will take a call. It's not that only SBI Card is available at a discount to the issue price. But obviously when you compare even after discount to the issue price, it is expensive compared to the listed large banks or large NBFC. So there will be a natural tendency for investors to, already it was adequately capitalized. So all these factors makes the company really interesting, but certainly valuations is a concern in this current environment when the entire economy is looking in a different direction.
So that
So
we'll let you go on that note. Thanks much for joining in. No one's really doubting the kind of healthy fundamentals, but just at a time like this, you wouldn't expect anything but. 726, that's the SBI Card listing as we speak. Let's also hear